So the CPI print is in a monumental 7.9%, but as Carl the Moon would say, exactly as predicted. So this was bang on with expectations. So a bit of a nothing burger today. So on the one hand, we had this CPI data from the US, and then on the flip side, we had the ECB. There's a bit of a conference, that's the European Central Bank. Christine Lagarde talking about the path forward in terms of inflation, interest rates, and net asset purchases. So we're going to go over that, have a little look at this kind of macro events that have been going on, and then a bit of a market update as well. So if you are new, make sure you subscribe to the channel, and let's crack on with today's video. So here is the headline figure. US inflation 7.9% in February, a fresh 4-decade high. This is not too good. So a reminder, CPI coming up today, expected year-over-year figure was 7.9% and a monthly increase from January to February of 0.8%. So we're almost at 1% per month now. And things came in bang on track here. 7.9% and then 0.8% respectively here. The fastest inflation growth since 1982. And this is pretty damning for the economy, for disposable income of people in the US, but this is obviously a global thing now, and consumer confidence as well, which of course, if you've got no consumer confidence and people aren't able to spend because they don't have the disposable income, you're going to be heading to a recession sharpish. So this is the real worry right now. And what can the Fed do to combat this? You raise rates, and this further drives down the amount of demand for goods and services. And we've already got that kind of low consumer confidence anyway. So I think this is really a rock and a hard place situation that the Fed finds themselves in. And we, of course, have that FOMC meeting coming up next week after this big CPI print has come out. So as the market absorbed this information, we had the typical market maker liquidity wrecking game where anyone who was leveraged long and then leverage short to high degrees was wiped out of the game. So essentially price started here around 39K, and then we went all the way up to around 40,300 bucks or so up there. And then price came all the way back down. So on the way up, we wrecked all the shorters, and then all the way back down, anyone who was longing that rally got wiped if they were on like 25 or 50x leverage, back down to 38.5K. So the market makers got paid during that volatile event, but now we're pretty much back on track to where we were prior to this. And of course, yesterday we had the Biden executive order release. We had a bit of a fake pump all the way up and then a crash back down to the same level we were at the day prior. So this volatile market is really living up to expectations here, being super volatile, hard to trade. Gains that are there one day are gone in the next day. So that is something to think about right now. Who else has been chiming in with US inflation data? Mr. Vladimir Putin. So in regard to the US ban on Russian oil, he says inflation there, i.e. the US, is rising. And this, of course, will continue to rise if the US now has to get its imports from elsewhere, set up new supply lines, and the knock-on effect of high oil prices, I don't really need to explain that, is pretty much everything goes up. So if I'm watching a few clips, Biden, etc., talking about things, we're getting this change in narrative around inflation. First, it was transitory, says Rick Santinelli here. Then inflation is good. It's a good thing. And then we went to it's corporate greed now. Companies were gouging prices higher, padding out their profit margins. And now it's pretty much inflation's on Putin, so utilizing the war as the real scapegoat for the inflation troubles in the world right now. But of course, we know when you print like 40% of all the dollars that have ever existed in a 2-year period, you're going to have mass inflation. But you can see the kind of narrative they're going with from the government to try and push the inflation narrative elsewhere. And this leads me to a few other thoughts around things Biden has said recently, talking about what they will do. They'll do anything necessary to ensure that consumers at home are protected. I'm not sure if more helicopter money is coming sooner than people expect here. I kind of get that vibe that maybe fiscal stimulus and this kind of direct payments that we've seen before, they've set the standard now with those direct payments, that this will start to come into play once again. So CPI data wise, things were bang on expectations. We now look forward to the FOMC meeting next week to see if they do hike the interest rates or not. Expectation around 0.25% for that. Simultaneously today we had the European Central Bank, and they've started to scale back their net asset purchases. 40 billion will occur in April, 30 billion in May, 20 billion in June. they are not increasing interest rates until net asset purchases have ceased. So a similar situation as to what the Fed is dealing with, but Lagarde here, who is the president of the ECB, suggests that interest rates will only start to be raised once they've finished net asset purchases. They expect that to occur in Q3. However, they're leaving the door open here, suggesting that the Ukraine-Russia situation is something they need to try and smooth out economically, keep money flowing and liquidity here in the markets. And thus, they may actually extend the net asset purchases beyond Q3, and the size of them is also up for negotiation, depending on what the data tells them. So I do feel like there's quite a lot of windows left open for fiscal stimulus to continue, the quantitative tightening cycle to not really get started even, due to the fact we're in such deep issues already, without them even hiking rates and without them even really cutting back with their net asset purchases on either side of the pond here. So really intriguing times overall. Lagarde also mentioned doing whatever was necessary to ensure price stability for consumers. I don't exactly know what they mean by this or how much of a real effect they can have over prices within a free market. But when they started to talk about CBDCs and how they're trying to usher these in, Lagarde said that she would support an acceleration of the CBDC issuance process. She is firmly behind a CBDC, a digital euro, taking place, and she wants to speed up that process. She's made it clear that, as she says here, she's pleased with the attention that the focus will now move over to the role of cryptos and how they will play into CBDCs and the impact they will have once implemented. So the CBDC for euro is an inevitability, but I think it's on a much quicker timeline than people expect here. And this maybe feeds into the type of monetary policy actions they can take. If they have a CBDC in place, they can directly subsidize some of your bills, airdrop you free money if you are struggling, implement any interest rates, both positive or we could go to negative interest rates and ensure money is just continually taken out of your account. And we start to really move towards a pretty troubling future with zero privacy for your money and full control for central bankers. This is literally what we're moving towards, and so decentralized money is where we need to be concentrating. Of course, if you're watching this channel, you already are, but it does seem time and time again that the out here is going to be a CBDC from all of these woes, so that central banks do have full and final control over monetary supplies. And the European inflation figure 5.1% respective to 7.9% in the US. Market update here. Yesterday we had a Monero price pump and general privacy coins went flying up for a short period of time, but they've now come crashing back down. So gains made on the 9th were erased. So Monero went from around 160 to 205, and then it's back down to around 160 again today. So a bit of a scam pump there for the privacy tokens. But what is doing good? Of course, it is Luna, and the Terra ecosystem is doing pretty damn good here. 1,000 Luna now, 102,000 bucks. This is my we're all going to make it bag if you can get 1,000 Terra. I think the future is pretty damn rosy. And if we just look at this for a 7-day chart here, it's really pushing up once again. All-time high set yesterday. It's pushing up there again today. 103.88 is the figure to take out. We're at 102 and 02. Generally, the Terra ecosystem of coins are performing pretty well. Some nice gainers within there, and they're not all actually listed on CoinGecko. So Astroport, for example, is not under the Terra tag, but this one again has been pushing up massively. 75 cents was the price around 2.5 weeks ago, back here on the 24th of Feb, now up to around $1.80 plus change. So the Terra ecosystem seemingly not knowing what a bear market is. So I think this is the area you want to be concentrating on. And if it continues to see gains across the board in the Terra ecosystem, this is where all the traders are going to flood, and this is where the liquidity is going to be as well. On the negative side, Phantom is continuing to slide here. I would suggest that this is a bit unfairly oversold at this point, but when people get scared, they dump, and Phantom is getting dumped pretty hard off the back of Andre Cronje leaving the project. So what have I been doing recently? How can we trade these markets? Well, Pantoshi here says that the ranges he's got on the charts here, we'll jump into, these ranges since the summer are still 100% valid, and probably why he's done so well thus far. He says trading this scam, as he calls it, is very clean. Sometimes sideways chop is a form of correction. So this is the range, summer lows down to around 29.30k. Summer range is around the mid 30 point, an area we've dipped into a few times here over the last couple of weeks. And then the macro mid range around 45k. As you can see, we've been ping-ponging around in here. And pretty much the suggestion is buy in these lows, mid to low 30k, sell in the mid to high 40ks, rinse and repeat, and you can do pretty damn well. I've been doing my best to do that as far as I can. Another thing to really think about is liquidation levels. This is data from High Block here, and ISO posted this before the dump. Have a hard time thinking price doesn't take out the longs. So this is when we were up at around $41,000 last night, and then we got the drop back down. So on the right hand side, you won't be able to see it on here, but this blue line marks out an area where there was 50x leverage longs on Bitcoin. Millions of dollars of liquidity sat there, so the market maker brings price down, takes all that liquidity, wipes out those traders, and what we're seeing here is that the price action is following exactly where the liquidation points lie on the charts. So playing the current ranges, looking at liquidation data, and maybe following the bubbling sectors of the economy here, the Terra ecosystem and the Luna token, is probably the way that you can most easily make some gains in this market if you want to participate right now. Sitting on your hands and waiting this out, earning some passive yield on stablecoins is definitely a good move though. As we can see, volatility is a feature. So all eyeballs will be on Jerome Powell on the 15th and 16th of March with the next FOMC meeting and the potential for our first rate hike of 2022 to be implemented. So we'll see how the market reacts going into that and post that. And I'm sure one thing is guaranteed, there's going to be a lot of chop around those dates. So I hope you enjoyed this one, bit of a market update and macro content. If you did, drop me a comment down below, like the video, subscribe to the channel guys, and I'll see you in the next one. Goodbye.